think they should have been cutting sooner. But, that's in the past.
But to the point that
Now
in
is about-
July, you made this point online that several officials saw that case for cutting at that July meeting, and that meeting was 2 days before the July employment report. You also look at the minutes saying that a majority of participants had said the risks to the employment goal had increased. Also, again, before that latest employment report. So how much risk now is there, Claudia, to the job market, now that we know what we know now?
I think it's in this place of we're passing the labor market is strong. I do not expect Jay Powell to say that again on Friday. The labor market is not strong. It is weakening. And then it is this question of the trade-offs. Like, we are in a space of trade-off. Do you need this weakening to get inflation down? If you do, then that could be then you could still go forward with it, right? I mean, inflation is not back to target yet. Or if you're saying, no, this has gone too far. And honestly, the relevant jobs report for what the Fed does in September is not the next jobs report. It's the one we get 6 months from now. And so we don't get to have that one when they cut in September, right? They really have to forecast about the momentum where things are headed. And you don't, their mandate is maximum employment. It's not no recession. Right. So the bar here is they should be looking for no less weakening in labor markets than is absolutely necessary to get inflation down. And I think the balance has now shifted. And I think we'll probably hear some of that from them. The balance is shifting towards we gotta shore up the employment mandate. It's going too far in terms of weakness.
And it's a great point, too, that it's not next month's jobs report. It's the one in 6 months that, we really care about. But if you think about the ones that we've had in the past couple of months and where we stand right now in the labor market, it just feels like there's a lot of different cross currents right now. Of course, you think about the tick up in prime age labor force participation. You think about the impact of immigration, what that means for the U.S. labor force. How are you weighing out those different factors, and where does that leave you on how strong this labor market actually is right now?
Right. So it is absolutely clear that one needs to pull on as many different possible angles of the labor market data. The unemployment rate is not going to be sufficient. Payrolls are not enough. Employment, so really pulling all these pieces together. The stories are complicated. And for the Fed's decision making, they really are in a risk management stage. And then it's about telling the scenarios. How could this go to a more negative scenario? How could this be, we just keep gradually moving along? Gradual rate cuts make sense, inflation, and then there are some inflation scenarios that one should be paying attention to as well. So it's a really complicated picture. I think that's one, it gives me pause when it gets tough to tell the story with the data. That is likely a time when things are shifting around under the surface, because if things were all moving in a very sensible way, all the indicators would kind of line up. So we are at a moment where the risks are elevated of pushing one way or the other, but we're not in a crisis scenario at the moment, that's very encouraging too.
Claudia, Mickey Bowman has pointed out that immigration has helped the labor pool grow, and that has brought down wage pressures. If we're already clamping down at the border more than we have been for the past 4 years, and President Trump wants to export 15 million illegal aliens who are also likely 15 million workers, right? If we get that immigration constrained, do we start to get wage pressures again pushing on inflation?
Well, the labor supply story, there are a lot of pieces to it. Immigration is certainly an aspect of it. It takes some time for people coming into the country to fully integrate into the labor market. So it's not like this is going to turn on a dime in terms of our labor market. And it's also to remember as the economy has been strong, the labor market has been strong, we have seen prime age workforce participation hit all-time highs for some important groups like women, other minority groups. A really strong economy can bring people in. And if we are growing the economy because there's more workers as they bring in the more supply, the Fed does not need to be afraid of a strong economy if it's because of supply. And there is a path to, this is not all just about immigrants bringing in supply. And so that's where keeping the economy going can actually keep that supply, bringing people in from the sidelines. So yes, yet it is a risk. The effects on immigration, and, the immigrant workforce, because we did have a really big increase over a short period of time. That's tough to parse.
The other part of this is you really only have one Fed meeting before the November election. The next one comes days after the election. So either way you go, there are a lot of investors worried about inflationary pressures under either scenario. What tax credits could mean, for example, for the economy. At the end of the day, how much does the Fed have to caution to prepare from any future inflation that could be under the regimes of either future president?
Yeah, the Fed has enough on their hands right now trying to figure out the economy as it is and where it might be. I think Powell made pretty clear that they are not thinking ahead to outcomes of different policy. Like there's too much to get ahead of. Oh, absolutely, the Fed will respond as necessary to whatever policies come online in the coming years with a change in administration. But they just can't. It's unlikely, and I think it would be unwise to be trying to play that kind of three-dimensional chess right now when they have other issues.
Claudia, we got to leave it there. A lot of uncertainty ahead. That is chief economist at New Century Advisors, and of course, the woman behind the very highly watched Somm rule. Remember, tomorrow we're going to have special coverage of Fed Chair Jerome Powell's remarks. Our coverage begins at 9 a.m. New York time. And coming up, Vice Presidential nominee Tim Walz introduces himself to the nation. We're going to recap day 3 of the Democratic National Convention and look ahead to Kamala Harris's speech next. Plus, later in the hour, we're going to speak to Democratic donor Alan Patricof of Primetime Partners. This is Bloomberg.
This is High Interest to look at what's making headlines around the world. Thailand is now the first country in Asia to detect new mutated strains of the monkeypox virus. The patient is a European male who arrived in Bangkok last week from Africa. Tourism-reliant Thailand said it will tighten surveillance and screening measures at all of its international entry points. The new Mpox, as it's known, strain has been spreading across several African countries and is reported to have killed more than 500 people in the Democratic Republic of Congo. Canada's two largest railways have shut down after failed union talks, putting a major strain on North American supply chains. Over 9,000 employees at Canadian National Railway and Canadian Pacific Kansas City were locked out after a deadline passed without an agreement on a new contract. And independent presidential candidate Robert F. Kennedy Jr. is closer to dropping out of the presidential race. He's expected to endorse Trump and announce his path forward tomorrow. Kennedy's departure from the race would end one of the more bizarre and surprisingly durable third-party presidential bids in modern American history.
Well, sticking with politics, it's the final day of the Democratic National Convention in Chicago. And last night, we heard from Minnesota Governor Tim Walz, former President Clinton, and Oprah Winfrey.
It's the honor of my life to accept your nomination for Vice President of the United States.
When Kamala Harris is president, every day will begin with you.
Kamala Harris is going to cut your taxes. If you're getting squeezed by prescription drug prices, Kamala Harris is going to take on Big Pharma.
Kamala Harris will work to solve our problems, seize our opportunities, ease our fears.
If you're hoping to buy a home, Kamala Harris is going to help make it more affordable.
We're going to be teaching our daughters and sons about how this child of an Indian mother and a Jamaican father grew up to become the 47th President of the United States.
Let's get the latest now from Chicago, where Bloomberg's chief political correspondent, Anne-Marie Hordorn, joins us now. And, of course, we have the big one tonight when Kamala Harris finally takes the stage. But let's talk about Tim Walz a little bit more. Of course, he's the governor of Minnesota. And prior to being announced as Harris's running mate, not a lot of people in the country knew who he was. This was his most high-profile introduction to the voting base yet. How did it go?
Yeah, well, he kept it very short. I think maybe he was trying to, given how long some of these nights have gone, trying to make a little bit of prime time on the East Coast. And he introduced himself to the American people, talked about the fact that where he comes from, you know, very small high school, 400 people in his town. He's a gun owner. He is a veteran. He ran for Congress. He has a very moderate voting record in Congress. Before then, of course, he became governor of Minnesota, where he's moved starkly to the left. So he's tried to introduce himself to the American people and really wanted to hit home also this idea about reproductive rights, talking about the fact that his family had some challenges with fertility as they were trying to grow themselves. And then after we got to know a little bit more about him, he went into really being the hype man for Kamala Harris. This is a guy who the Democrats have now been calling Coach Walz, and he's basically looks like his role in this election is going to be the constant pep talks. And he was the individual that started to cast Donald Trump and J.D. Vance as, quote, weird, that has really caught on with a lot of Democrats here. So he introduced himself yesterday. He really was hyping up the crowd for this evening, and we will hear from Kamala Harris. This is an important moment for her. We cannot deny this is very historic, and we have to say it's an entire mood change than what we were expecting just a month ago in terms of Harris now taking the top of the ticket and that torch passed on Monday from Joe Biden to Kamala Harris.
Clear eyes, full heart, can't lose. Anne-Marie, you know, the other conversation you had there that I'm really interested in is with Pennsylvania Governor Josh Shapiro, who was someone who could have been on her ticket with her. A lot of people out there wondering what it means for him not to be on the ticket, about her relationship to Pennsylvania. Was it a slight to him? What did he say to you?
Well, he definitely doesn't think it was a slight. He said this has really come down to, you know, the vice president, a gut instinct for her. He's behind this ticket, and he's out there campaigning for Harris Walz, and he wants them, obviously, to win Pennsylvania. A few things I thought were interesting from this conversation. He says that he goes out to some of these rural counties outside Pittsburgh, and people will ask him, you know, we voted for you, we like you, we got a sense of who you are. What do you think about Kamala Harris? He says there's tremendous amount of curiosity. And right now, as they have this sprint, 75 days till November 5th, even earlier, if you're voting in Pennsylvania by mail-in ballot, you can start to cast your vote just a week after the first debate between Trump and Harris. He says there's all this curiosity, so they have this moment now, and he thinks that's a good thing for not for Trump to try to really identify who she is, but the Democratic Party. And then we also asked about the authenticity of Kamala Harris, given she's flip-flopped, as I think a number of journalists would call it, on a number of positions, most notably for Pennsylvania on fracking. And he doesn't call it that. He thinks that, you know, things change, context changes, and he wants to see a leader who's able to, even though potentially there'll be criticism about it, change their mind and position when given new facts.
Anne-Marie, thanks very much. Bloomberg's Anne-Marie Horton, our chief political correspondent, joining us in Chicago at the DNC. Still ahead, snowflake falling like a stone. We'll tell you why in Social Climbers next. This is Bloomberg. This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on what's going on in the markets right now. Just about an hour into the session, we have now turned down, unchanged on the S&P 500 and the NASDAQ 100. You can see that the 10-year yield is rising, so investors are selling stocks and bonds. So much for that yield price correlation. Katie?
All right, it's time now for Social Climbers. The company's making waves on social media this morning. And first up, Snowflake giving a chilling sales outlook that failed to reassure investors that the company will gain ground in the market for AI software tools. Remember, in May, the cloud computing company announced that some of its clients, including AT&T and Ticketmaster, had their Snowflake accounts breached as part of a hacking campaign. Next up, Edgar Bronfman Jr. said to be raising his takeover bid to $6 billion. Earlier this week, he made a $4.3 billion offer for control of the entertainment conglomerate. Paramount had already accepted an offer from Skydance, but has now extended by 15 days that deadline to consider other offers. And finally, Carlyle Group is buying a unit of Advanced Auto Parts for $1.5 billion. The purchase of the Worldpac unit is the first major industrial investment for Carlyle in over 2 years. Advanced Auto Parts has been under pressure from shareholder activists to divest from the Worldpac unit to better compete with AutoZone and O'Reilly Automotive. Shonali.
And one to talk more about that Carlyle deal because, of course, we've had so many deals as of late. And so interesting, Matt, Carlyle, this is the first major industrial investment in more than 2 years for the company. Some of their biggest bets have been in industrials, $13 billion spent in the sector. For Advanced Auto Parts, interesting, big decline in its stock after its results. But fascinating is they've actually faced an activist investor for months that have been wanting them to do this. So they're not feeling the benefit of that stock relief. Maybe the stock would have been down more, though, had they not sold this.
Right. The concern is that they aren't compensating, I guess, their employees enough to keep up with AutoZone and O'Reilly. But this is interesting, selling off a unit that gets rid of OEM parts so Advanced Auto Parts can focus on its own brands. Also interesting that private equity is doing more and more big deals, right? This isn't, a huge $1.5 billion, but we're seeing... Yeah. Did you see the note Shanali sent around this morning? More than $5 billion. Those are considered mega deals, right? And we're on track to make a new record.
Yeah, I will say for Carlyle, so this is their first one of these in a while, but over the past 2 decades, I mean, they've invested around $13 billion in industrial carve-outs such as this one. You think about some of their high-profile ones over the past 2 decades. So maybe $1.5 billion, not enormous, but it's certainly a step back into this space.
And real quickly, while we're on the note of deals, let's just look at Paramount shares as well, because of course...
Never ending.
Never
ending.
My goodness. But more money, $6 billion, speaking of mega deals, maybe pseudo-private equity, given this is a large billionaire investor. They're topping their $4.3 billion proposal from August 19th to make a $6 billion proposal here. Does it change the game? It might. You have Paramount really moving back their deadline here to at least review this deal.
All right, we'll see if this one ever gets done. But coming up, we get a health check on the fitness industry. We're going to do that with Jim Rowley. He is the CEO of Crunch Fitness. That conversation up next. This is Bloomberg.
On Bloomberg.
There's absolute opportunity in real estate at all times. Real estate sort of moves in different buckets. You know, some part of real estate is hot, just like a stock market, and some parts are cold. Our transformation of the malls, we bring in more traffic and high quality people than almost any anchor, and we can transform the fundamental results of a residential building. Construction costs are starting to taming down. I think next year will be better than this year. So yes, all things are working in the right direction.
And that was, of course, the CEO of Lifetime, Bahram Akradi, speaking to us on Monday morning. There are a number of challenges facing the fitness industry still, from GLP-1s to real estate challenges. That is not stopping the rapid growth of Crunch Fitness. The company's CEO, Jim Rowley, is with us now. Crunch was recently named the top-ranked fitness franchise by Entrepreneur Franchise 500. Jim, great to have you on the program again. You just got over dealing with the challenges of COVID and the lockdowns. Now, I wonder if GLP-1s are a headwind for you or actually a tailwind because they encourage people to get in the gym and get healthier. What do you think?
Yeah, I think they're a tailwind. Look, as the original No Judgments Gym, we're going to meet the members wherever they are on their fitness journey. We believe fitness is medicine, and we're focused on getting our personal trainers specialized to help these members on their journey, specifically because these drugs create muscle wasting, and we don't want to have a skinny person with no muscle. That's pointless. So we're working on a lot of new training modalities to help people on their journey.
Right. So after you lose the weight, you want to put on the muscle. That makes sense. And I want to talk about your expansion plans, because you and I actually spoke in April, and we talked about the 500 gym milestone that you're trying to reach this year. You're at 460 gyms right now. Where are you on the path to 500?
I think we're going to blow through 500 this year, and we'll be north of 3 million members as well. So the momentum has continued. Our teams are incredible. Our franchise owners are having one of the best years that we've ever seen as a franchise company. And our members are young, strong, and social, and they spend money on fitness, and they're incredibly welcome at Crunch, and we're happy to have them.
Jim, also interested about some stuff going on in your industry. You look at what happened with Blink, for example, filing for bankruptcy, is part owned by Equinox here, owned by Equinox. At the end of the day, when you look at Blink, looking at bankruptcy, do you think you can buy them out of bankruptcy? Do you think that you could buy assets, maybe equipment, or head into their locations?
Yeah, look, our industry can be difficult. It's competitive, and nobody wins when one of us loses, but we explore every opportunity. We've had a hard look at Blink. Unfortunately, geographically, we're very close to each other in proximity, but if their members are looking for an alternative, Crunch is open. It's unfortunate, too, because I think this is a result of, government shutdowns stemming from COVID. And look, it affected all of us, and I hate to see it, to be honest with you.
I wonder about the aging demographics of this country, Jim. You have young members at Crunch, but as we all get older and don't make as many new people, do you start to focus on trying to get more of a geriatric clientele, at least in some of your locations?
Yeah, we've got members from 18 to 80, and we have a program that we run called Silver Sneakers. We don't run the program, but we're part of the program. So we get a lot of people that are aging, and maybe they're trying fitness for the first time. They realize later in life that this is a massive component for them to have longevity, to add life to their years to their life. So look, we're the original No Judgments Gym. We're open to everybody on their journey, but we've got a lot of members. And what's interesting is our social media has recently been packed with older women in their 70s and 80s doing strength training. It's all about strength training right now.
It's so funny. I mean, my mom, actually, she's under 70, but she just joined a gym for the first time in the past year. So clearly there's something going on there. But
bone density.
Yeah, that's important.
Exactly right.
That's important. But let's talk about some of that younger generation, though, that you're also trying to court too, because I want to talk about pickleballers. So this is this 8-week class. It's offered at 6 Crunch locations this summer in New York, New Jersey, LA. I mean, when you think about how to court the younger generation, get them to sign up for gym memberships, memberships. How much do you need to offer sort of sports and activity-specific programs such as that one?
Yeah, it's a great question. Our members say that they want everything under one roof, right? So we've got to stay highly versatile. We've got to try new things. We've built the best workout floor there is. We've got massive recovery areas. We've got high-intensity interval training. But with our group classes, we try to have all the variety you can think of. And I'll be honest with you, when they brought me pickleball, I said it's never going to work. I was wrong. Those classes are packed.
Pickleball rules.
I'm a tennis person myself, we know this. But Jim, another question I have for you as a CEO of a large fitness center as well. You look like you are in very good shape yourself. What's your fitness routine?
You're swole.
First of all, thank you very much. As soon as this is over, I'll be going to my gym. But I'm a weight trainer. I've been a weight trainer since I was probably 14 or 15, and now I'm 57, still hitting the weights. They're not as heavy as they used to be, but I still do that. But I do Pilates twice a week here in town as well.
You and me both, Jim. I also do Pilates, but I obviously, I don't know, I'm lacking in the muscle department. But in any case,
you're a runner.
I am a runner. Yeah. It doesn't exactly lend itself to having gigantic muscles. But let's talk a little bit more about those expansion plans. We talked about the 500 gym milestone. It sounds like you're well on your way there to surpass that. What about membership? You're above 2 million members right now. When you think about targets such as that one, where do you think you can get to?
Yeah, so we're north of actually 2.7 million right now, and I've got a strong belief that we'll be at 3 million come January. As I said earlier, the momentum has just been astounding for Crunch this year. Our franchise owners are opening gyms as fast as they can, and they're opening with thousands and thousands of members on day one. So it's really an exciting time to be the CEO of Crunch, and we're looking forward to continue to open more gyms.
All right, Jim, really enjoyed this conversation. Appreciate you taking the time. That is Jim Rowley of Crunch Fitness. Let's get a check on these markets right now, or rather, let's take a beat.
Well, I just wanted to, I got those new pickleballs.
You did,
from Bahram the other day.
We watched that pretty viral online.
Did it?
It did. People really love your pickleball
video.
They like
props, too.
Props are always good for TV. I've been taking them to pickleball the last 3 nights, and they really do. I don't want to editorialize too much, right? They say they don't make a lot of money on this product, so it's not. They really do work better. They're so much more consistent. They're so much more precise.
The less you want GLP drugs. What do you feel? Because you talk about it a lot.
Yeah. No, my problem is I still go home and just down a pint of Haagen-Dazs after pickleball. So I need to find some way. I can't do it with willpower because I'm weak, as you know. I need to find some way to get rid of the sugar.
We've got to iron out this routine somehow. We're going to continue to work on that one, but we probably should look at markets right now. We're an hour into the session, and stocks have turned negative a little bit here. Let's talk to Bloomberg's Abigail Doolittle.
Yeah, lots of flip-flopping on the day, Katie. Very small moves below average volume, more than 30% below the already anemic recent volume. And you can see over the last few days, this has been this story, moves higher and lower. Yesterday, we ended higher. Tuesday, we ended lower. Today, it's unclear. Right now, a gain of ever so slight amount. Now, beneath the surface, though, there are some movers to take a look at. Starting to the upside, creating this bull-bear tug-of-war. Zoom up 12% nearly, the best day since 2022. They boosted. Apparently some new product offerings there really helping out. Broadcom up 1.9%, really helping out the chip sector because the stocks is underperforming. And one reason why, take a look at Intel, down 3%, down more than 55% on the year. Lots of disappointment about their performance and failure to really turn things around. That trajectory continuing today. And then Snowflake, the software company, one of the biggest laggards for the S&P 500, down 12%. They basically were in line in terms of the numbers, but investors wanted more, and as a result, the stock is down. Now, it's interesting that we have this bull-bear tug-of-war, once again, beneath the surface on a micro level. It's also on a macro level. So this is a year-to-date chart that our great markets producer, Terrell Holt, helped make here, and you can see this is a possible double top that's getting ignored because it's hard to see it in logarithmic form, but in line form here, a mathematical form, or arithmetic form, you can really see it. So there would be the first peak back in July. Here's the possible second peak. Right now, it's the possibility of a perfect double top because the second peak is less than the first, telling you that the current buyers, they have less enthusiasm than they did back there. If we showed the RSI back here overbought, it's not here, also supporting that idea. But it doesn't confirm until it goes all the way down. And something we should note, Katie, we have this interesting tension because at the same time, the S&P 500 super close to its last high. We just don't know whether or not the bulls are going to pull the index forward or if we're going to see that move down. There's probably slight factors pointing to the downside, but it needs to happen before we know that that is in fact the case.
Yeah, big time. That's the big question, of course, whether we peak, we plateau, or we keep climbing. Bloomberg's,
And
yes.
do you look at charts in log or in arithmetic form?
Don't. I go to GP on my terminal, and that's good enough for me. But in any case, coming up, it's the final night of the DNC where Kamala Harris will address the delegates. We're going to speak to Alan Patricof of Primetime Partners next on her rapid rise to the top of the party and also the longevity economy. That conversation coming up next. This is Bloomberg.
Tonight's the final night of the Democratic National Convention in Chicago, and the main event is Vice President Kamala Harris set to accept formally her party's nomination for president. Joining us now is Alan Patricof, Primetime Partners chairperson and co-founder. And Alan, we want to go around the industry with you. Of course, we want to talk about what you're doing at Primetime. We want to talk about technology and venture capital. But given what we have tonight as well, as a large Democratic donor, very curious about what you want to hear for the presidential nominee tonight.
Well, first of all, I've lost, like a lot of us, a lot of sleep in the last couple of nights. And
they stay up late.
Rumor is they're going to move it up an hour, because otherwise you have to be up till 12:30 or so to see the final speech. And my voice, Waltz was terrific last night. He really knocked it out of the ballpark. I think it's been a very exciting convention. I unfortunately couldn't go this year. It's the first time I missed it in, I don't know, 10, 15 years. And I think the Democrats are on fire. I think Kamala is just re-energized everybody. I mean, you can see, it's palpable when you talk to people, when you go to events. There's just a whole different energy. And I was a very early Biden supporter. I think the world of him. But Kamala has just lit the whole party on fire. And together with Waltz, I mean, this is one vice president who you're going to hear a lot from. He is not going to be sitting in the corner.
It always helps when you talk only about spending money and don't say anything about paying for it, right? But I have read that the Harris-Waltz ticket would go forward with Biden's plans to raise the corporate tax to 28%. They want to raise capital gains tax to 44%, and then even tax unrealized gains at 25% for those with over $100 million in assets. Don't those taxation plans seem a little bit aggressive to you?
Well, first of all, I can't possibly envision them taxing assets. I think that's an unrealistic approach, certainly for this country, but it's been tried before, and it's very hard to implement. But I'm in a high tax bracket. I mean, I can't deny that. But I think that there needs to be more income equality in this country, and I think to have given the tax breaks that were given by Donald Trump, and they were given primarily to people who benefited or people in the higher bracket, including myself. I don't think it's unrealistic to talk about increasing rates, and the rates they're going to go up are not, as it's been made very clear, it's not for the middle class. In fact, just the opposite. It's going to be in the higher income levels, and I don't think that's unrealistic. And I think there are a lot of programs that have to be undertaken that this new administration will do. I think it's going to be a very exciting 4 years, honestly.
Well, it's really interesting to hear your perspective on some of the economic policies, because there's plenty of people in your tax bracket who are very concerned about taxes. And as such, we've seen them really throw their support behind Donald Trump. And to that point, you mentioned that you were an
Even
early...
Mark Andreessen.
Yeah.
I mean, what is going on when Mark Andreessen comes out publicly supporting Trump?
I wrote an op-ed 2 months ago, not 2 weeks ago, 2 months ago, that did not get accepted. And everything I said in there is exactly what's being said every day. The guys on the West Coast primarily, but there's some on the East Coast, it's selfishness. It's not thinking about the country. It's thinking about their own pocketbook. Their focus is on crypto. Their focus is on 232. Their focus is on as their personal pocketbook in terms of tax rates. And part of it is the carried interest, which I am a prime beneficiary, and I have said that carried interest is ordinary income for the last 10 years, and it never gets passed. But it's a very selfish approach that they have taken, and I can't see any other rationale for this, including Mark Andreessen and Mark Zuckerberg and a whole bunch of others that have all of a sudden become Trump or Republican supporters.
Well, have you put,
shame on them.
Have you put your own pocketbook behind the Harris campaign?
Yes. Okay. I mean, of course. I mean, I'm not a major contributor, but I certainly have given I gave to Biden on several occasions. I met Joe Biden in a hotel room. Sounds serious, but before he even declared, when he said he was going to declare, and so I've been on board since the very beginning. At that time, he was alone with one assistant.
Yeah.
Big
What do you
difference.
think is going to be the biggest difference between how Biden has run the country and how Kamala Harris may? When she chose Tim Walz to be her running mate, a lot of people, investors in particular, said, well, she went left. Do you think that she will be as left in her policies when it comes to tech regulation, when it comes to social policies?
I honestly think she's very sensitive to this whole issue. And if nothing else, she hears what's being said out there and the charges against her. My sense is she will be a much more moderate person. I do think there are some issues. I forgot to throw in before the other issue that they're very concerned on the West Coast is Lena Khan and her anti-competitive, which is absolutely on board. And believe me, again, that's not my support because they're buying some of my companies. But
this is what Andreessen, this is the reason he gives for supporting Trump. He says it's because he's worried that over-regulation, especially on AI, is going to cripple the U.S. in its fight against China.
Well, now you bring up another subject, which is AI.
Right.
I mean, what has been introduced and which Trump would reverse or cancel is some intelligent discipline into this new technology, which no one knows fully, least of all me, what the implications will be long range of AI. It is so ubiquitous that having intelligent moderation makes sense. Let's talk about prime time.
Yeah.
I want to, but one more question on Lena Khan and regulation. No, I want to get to it for sure. But I just want to ask about how you think the administration should deal with Google, or regulators should deal with Google, because it's such a giant monopoly and so pervasive in all of our lives, right? Should it be broken up like Ma Bell style? What
worries me, and I've said it on this program on Bloomberg 2 or 3 years ago, is the thing that concerns me is we all get this when we get this link that says accept or don't accept, and we allow or don't allow, and we unfortunately always feel if we don't allow, they're going to do something to us, so we press allow. They collect all this data. I'm sure you've been a victim, or whatever you want to say. If you mention the word audio, the next day you know, or next hour, you're going to get an ad for some new audio equipment. And I think the ability to take that data and make it available to everybody on an equal basis would solve a lot of the problems. So it's the monopoly of data that they're picking up from YouTube, from Google itself, and obviously this extends to Facebook and everyone else. And if they could take the data sets and make it available to everyone, I think that would be level the playing field and might in some way accomplish.
Well, I'm really interested to see what ads I get on my phone after this conversation, given that it's on the desk. Let's talk about Lifetime. Great idea. Prime time, Lifetime. I was thinking about the gyms. Prime time. So the focus of prime time, you're going to redefine how we age, improve the quality of living for older adults. That's the mission statement. Walk us through some of your portfolio companies. I mean, where are you finding the most opportunities, and in what areas of the longevity economy?
People don't realize that the fastest growing part of the population is people over 60. It's not people under 18. There'll be more people over 60 than under 18 by the next 10 years. So it's the fastest growing part of the population with the most money to spend. So they're doing everything. There are so many things they need. Caregiving, of course, comes up first and foremost. Second is detection of diseases. We have a company called Isaac Health, which attempts to detect over television, over video or over voice, degradations in terms of voice that may be affecting your neurological issues. We have another company called Kintsugi on the West Coast that does the same thing to determine depression. Loneliness and depression is a very big problem. At the same time, we have a company called Sheer Health, which is trying to help you pick which program you're going to see any day now. October 7th starts the Medicare season. You're going to be inundated with Medicare Advantage. How do you select it? Sheer helps you do that.
I was interested in that, actually. It was interesting. I was listening to, frankly, the Jon Stewart podcast the other day with Mark Cuban, and this worry about the cost of health care, particularly as you age, you need more medicine at the end of the day, and insurance is a labyrinth. How important is that issue to you?
It's extremely important. I mean, Sheer helps to monitor your costs you're getting from your health care. I maybe misspoke. They're trying to monitor when you're getting all these bills, which ones should you pay, which ones, how to reconcile it. We have a company called Connie Health that really is the one that's, I should have said, is helping you pick the right plan. But our portfolio goes from Carewell, which is a catalog company similar to Amazon, but it's only for products that older people need it's enormous, the number of things, whether it's bed sheets, bedpans, diapers, canes, walkers, whatever it is. There is a whole slew of products, so that's another one.
It sounds like AI could help with almost all of your other portfolio companies, like detecting maybe if you have dementia or depression, helping you sort through costs.
All of the above. AI is critical. It's a way also of detecting for people, and there's an enormous amount of paperwork involved in the whole medical field. We have a company called CoreCare, which helps the senior living facilities to reconcile the payments that are due to the various people who should be receiving payment. And the coding is a major issue in reconciling this and making sure that there's not, instead of getting a receivable of 60 days, they can get paid in 20 days. So there's all kinds of things that are out there now that are helping. Another company we have called Bold, which is deals with one of the biggest problems, which is balance. You take that for granted, but as you get older, it's the biggest cause of falling. An ambulance comes and picks you up, takes you to the hospital, you get pneumonia, then you get sepsis, you're gone. And this is a really, really important issue. Lastly, I'll throw another company out, Safe Ride, which is a basic ride company. However, it specializes and works all for the healthcare plans to make sure you get picked up and delivered, whether you're at the first level, which is just you can walk, or whether you're in a wheelchair, whether you're a walker, or whether you actually need a stretcher. It's called non-emergency medical transportation. So these are all things I'm sure you hadn't even thought about beforehand, but they're all in the category that Primetime Partners is doing. And
it's amazing opportunity to make money, but also hopefully to make our lives better.
Absolutely. Alan, unfortunately, we have to leave it there. We have to have you back soon. Really, really enjoyed this conversation. Great to have you on set as well. That, of course, is Alan Patrikoff of Primetime Partners. Meanwhile, take a look at markets right now. We have reversed just about unchanged on the day for the S&P 500. A little bit worse if you take a look at the NASDAQ 100. But that does it for Bloomberg Open Interest. This is Bloomberg.
changes everything. From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, this is Bloomberg Technology. Let's get to it with NVIDIA. Back beating Microsoft in market capitalization. We talk with a top shareholder in the chip giant. Meanwhile, Peloton jumps on better than expected earnings. We talk turnaround efforts as it pushes for profitability. And Apple's App Store reorg. We discuss the executive shakeup as amid a regulator scrutiny. That and so much more coming up. But first, let's check in on these markets because, look, we're tussling ahead of the all-important speech coming from Jay Powell. Of course, we're all eyes on what is happening in Jackson Hole tomorrow. We're down about 0.1% on the Nasdaq 100 more broadly. This is as we see more of a tug of war of who is going to be the most valuable company across some of the benchmarks. Apple still reigns supreme, but NVIDIA managing to eclipse Microsoft. Let's move on to some of the individual movers in terms of the earnings sector, though, because we are actually seeing individual companies on the move. Look at Peloton. Yes, it's only worth $4.28. However, we are seeing a 27% move. This is on its current quarter, the quarter they just reported, the fiscal fourth quarter, coming in better than expected. Forecast not looking that strong. I'm going to delve into it with a key analyst a little bit later. Zoom also on the up and up. We're more than 11% higher. Sales forecast for the current quarter beating analyst expectations. Kelly Steckelberg, actually the CFO, is announcing her retirement or moving on from the business, but the departure isn't a result of any disagreement, so the company says. We're seeing Snowflake, though, down more than 13%. Is the AI part of this equation not running strong enough as a software business? That is the key concern as revenue forecasts just miss expectations. We'll do a deep dive on that a little bit later. But now, look, let's get to what has been the market capitalization story that we referenced. NVIDIA eclipsing Microsoft again. The two tech giants really have been jostling over the world's second most valuable company title a few times over the past week. I'm pleased to say Emily Graffeo joins us to talk it all through. And NVIDIA, just as we look towards earnings, August the 28th, still seems to be getting the momentum from who's purchasing what from them.
Yeah, I mean, that's exactly right. We haven't had NVIDIA's earnings yet, but from the earnings that we've seen so far, we're noticing, and investors are noticing, that these big tech companies are still willing to spend a lot on AI, and NVIDIA is the biggest beneficiary of that. If you look at just Microsoft, Amazon, Alphabet, and Meta, all in their earnings reports, they kind of underscored this idea that we want to continue to spend on AI. And I was looking at a note this morning from Nick Kolas of DataTrek, and he pointed out that for Amazon, Microsoft, and Meta, the operating cash flow growth exceeds CapEx. So that means that these companies still have a lot more cash to deploy on the CapEx. So he takes that as a sign that the companies will continue to spend even more on AI, and that's going to benefit NVIDIA. Whether or not we'll see that in the results next week, that's really the big question. But like you said, the stakes are very high right now, especially after TSMC earnings were good. Everyone's just watching for NVIDIA to see if they can keep up with that.
And look, there's a load of anxiety. We have seen how basically bullish the market was and a few concerns within the market at the beginning of August, and we saw a significant sell-off, and we've actually been seeing the sell-off since July. What do flows tell you in terms of people's appetite to get into a company that has got such a high market cap?
People are buying the dip. It's surprising because all year I keep asking sources, okay, well, is it time to finally pivot out of big tech? But we're actually seeing people, the rotation into small caps, that's really not a theme anymore. Investors still have this appetite to hide out in big tech, even amid concerns that the economy is slowing. If you look at the flows, QLD, this is an ETF that goes 2x QQQ, so big tech, but going ultra bullish QQQ. It's taken inflows nearly every day for the last 2 weeks. Wow. And just in the last session, it took about $250 million in, which is the biggest flow since April. So even after the sell-off that we saw to start August, we're still seeing that appetite to buy.
Okay, we're seeing some long positions in this market. Emily Graffeo talks us through it when it comes to NVIDIA. Look, let's talk about one of those longs. Tony Wong is one of them, one of the key holders of NVIDIA, portfolio manager at T. Rowe Price. T. Rowe, in fact, Tony holds what, about 2% of NVIDIA's shares outstanding. That's $56 billion worth. That makes you the 7th largest individual shareholder as an overall company. But at your fund, the Science and Technology Fund, why remain bullish on NVIDIA?
Yeah, well, I think there's a lot of reasons to still like the company. I mean, they've driven accelerated compute about 1,000x over the last 10 years, and they continue to be the leaders in the space. And AI is right now just too important of an area to let up the gas. And so I think that the large companies will still spend. I think there's a tension of like, just, what does spending more mean? And does that meet expectations? And that's what the market's really going to be focused on going forward. And so I think like there's a lot of great reasons to like the stock long term. I think that at the same time, you have to remember that semiconductors are very cyclical and they're also secular. So I think that's part of our job to navigate the environment.
So basically, brace yourself for potential short-term volatility, but longer term, you're still bullish on money coming into the likes of NVIDIA. But does it broaden out? At the moment, it's felt like NVIDIA is the only picks and shovels game in town. But you started seeing Broadcom doing relatively well on some AI wins. What do you make of NVIDIA really remaining the main place to win on AI?
Yeah, well, I think that the reason why NVIDIA has been so good in terms of it's because it's a platform, right? It's not just a chip. And so they have a big ecosystem with lots of developers writing on their code and CUDA. And so it's all built like an ecosystem platform. And so I think that's why it's such a defensible business. And, it's available everywhere. It's ubiquitous on the cloud. You can have it on-prem, and they've got great support for their chips. And so I think that's largely the reason. I think it could be changing in terms of the complexion going forward is more concentrated among the hyperscale players, and they're very sophisticated buyers of chips. They can do a lot of their own software. And so I think there will always be a balance between the hyperscale making their own chips with like significant volumes. Like you've seen Google with their TPU, that's very aimed at search. Yeah. And so I think that will continue, in other ways. And so I think they can coexist essentially.
I like that point that you've been making, and we were just hearing how DataTrek is seeing the same thing, that there is a willingness on a capital expenditure perspective coming from hyperscalers. You were in a number of those hyperscalers, Microsoft, Meta, for example, Alphabet, and Meta seemed to manage to nuance the argument of why they put money in there. Whereas Alphabet, people were worried about just spending CapEx at all costs. What do you make of the hyperscalers' decision to keep on putting money in?
Yeah, I think that Mark did a nice job of kind of illuminating why he's spending so much in AI, like with personalized chatbots and like how that can go through the platform. I think that you shouldn't count Google out at the same time. They have a lot of AI expertise. They've been leaders in the field. They have great chips as well. And so, I think that it's too early to call who's going to be the winner or loser. They all have big platforms and user bases where they can scale their AI investments. And so, I think it's too early to call like who's going to win or lose. But at the same time, they all have really great businesses.
Return on AI. ROAI is this horrible acronym that's suddenly coming into the marketplace. What do you make of, though, the returns that we need to start seeing? You're a key holder in Apple. I think, again, T. Rowe Price overall is about the 7th biggest holder of Apple stock out there. That company, again, managing to tell us why they can be an AI bet. Where does the money end up flowing in terms of return on an AI investment?
Yeah, I think that we'll be looking for return on AI investment. I think Apple specifically is in a great position because they're kind of the ecosystem owner, right? So they can integrate great technologies into their phones, into their hardware, and just like they did with Google Search. And so they didn't have to develop Google Search, but they definitely benefit from users using Google Search. And so ChatGPT is the same thing. Going forward, they don't have to develop a frontier model. They can integrate it with their phones. Now, I think you can argue whether long-term a company should own the frontier model here, but right now Apple's strategy is really focused on what they're really good at, which I think is design and integration with your life of their products and services. And so it's an interesting way to be a capital light player in this kind of AI proliferation here.